program will begin in 10 minutes. The program will begin in 10 minutes. The program will begin in 10 minutes. Please take your seats. The program will begin in 5 minutes. Please take your seats. The program is about to begin. Please welcome to the stage Bloomberg's Lisa Mateo.
Welcome, and welcome to Bloomberg, the Future Investor. You can see harnessing innovation amid volatility. So thank you to everyone who is here in Dallas. Thank you for joining us. If you're here on the live stream, watching from somewhere else, thank you for joining in as well. We're very excited to have you here for this portion of the 2024 Future Investor Series. Now, volatility, it's a word we hear quite often, right? So today you're going to hear from a lot of industry leaders who are using technology to help navigate through that uncertainty. They're going to be talking about the different strategic measures they're using, talk about the success stories they've had, but also at the same time talk about the challenges that they've faced, because that's going to help all of you who want to know the do's and the don'ts of when you get involved and take that technological leap. So there's a lot of questions, right? How does data and AI, how they can be used together to make these financial innovations, how they can help steer critical business decisions. What's the right mix of human versus AI, right? And also, what are the trends that are facing? What are the up and coming trends, and how does technology need to change in order to meet those trends? Well, we're going to talk about that and a whole lot more. We're just scratching the surface. But before we get to our panelists for today, I'd like to make a few announcements. First off, I'd like to thank Invesco QQQ. You'll be hearing from them in just a few moments, so stay tuned for that. Also, if you have any questions, please take part in the conversation. It makes our job as panelists a lot easier when you ask some questions. But you can do it by scanning the QR code here. You also have QR codes on each of your table. So if you have a question, scan it, write it in. It'll pop up on a monitor, and we'll try our very best to get it answered on the stage for you. And for those of you who partake in social media, please use hashtag #TheFutureInvestor. Also follow us at Bloomberg Live as well. We'll be posting different highlights. And if you decide to post anything, whether it's pictures or maybe something that you heard today that you thought was insightful, please tag us also at Bloomberg Live. All right, it is time to get things started. Are you guys ready? Please welcome to the stage Paul Schroeder from Invesco with our opening remarks. Thank you, Paul.
Good afternoon, everyone. Thank you very much, Lisa, for the intro. As Lisa said, my name is Paul Schroeder, and I'm the QQQ Equity Product Strategist with Invesco. And I want to welcome you all to the Future Investor Series here in Dallas. We're very proud to partner with an industry leader like Bloomberg to discuss these sort of topics that are really transforming the way that we're all investing. You know, we've partnered with Bloomberg on several events throughout the years. You know, some of the larger ones being Bloomberg Invest in New York, along with the Bloomberg Technology Summit out in San Francisco. But we've also been expanding and doing a lot of these regional events like the one you're at today. Now, if you have a chance to go to either Invest or the Technology Summit, I highly recommend them. They're fantastic events. But the feedback that we've been receiving on these local events is that they really have been impactful. And why is that? When we take a look at the type of content that we'll have for you today, you know, we're having leaders within their given industry across all different areas of the market that are providing great insights overall in a much more intimate setting. And overall, what we've seen is that that's really provided and made it a little bit more tangible for the people who have attended to wrap their heads around some of these more forward-thinking ideas and themes that we'll be discussing today. Also, though, you know, this is the exact type of content that Invesco QQQ should be sponsoring overall, since really what we're going to be talking about is how companies are evolving and innovating in their own given industries. So I want to thank you very much for your time, and more on QQQ later, but for now, enjoy the program.
on to our first panel. We're going to learn from all the folks here up on stage how you can capitalize when using all these different technological advancements. So I want to introduce everyone. We have Lauren Woods right here from Southwest, Andy Marcus from AT&T. We have Gustav Schrills from Omni Hotels and Resorts, and last, Sandeep Dave from CBRE. So thank you all for joining us. Now, before we had conversations, I had conversations with each of you about volatility, because that seems to be the theme here. And I spoke with you about that, and what I want to dig into is how you can use technology to help deal with some of that. So Lauren, I'll start with you, because I know we were speaking about the changing customer, right? The changing customer, different travel demands, different generational shift in the customer, and also the crowded airspace. Yeah. So dig a little bit into that, but also talk to us about the technology you're using to help with those changes.
Sure. As we find past COVID and the pandemic, our travel behavior has changed. And so those core customers that used to fly all the time on Southwest are flying less on us. And so that means we have to fill our aircraft with customers that don't fly us all the time. Well, who are those customers but the younger generations? And so their expectations of how we're going to meet them and where they're going to find us and how we're going to communicate with them and how we're going to meet their needs from a service level all change from the older generations to the newer generations. So it's very important that we do things that are digital first. We meet them where they're at. We find them where they're at places like Google Flights and other things that we've done. Being able to do a lot more self-service. You know, our younger generations don't necessarily want to pick up the phone and call people. So we have to be able to give them what they need. All of that requires a certain amount of data and insights on who they are. And so that's really important that we get our data foundation correct.
Okay, and then I want to go from airlines to hotels. The hotel industry. Gustav, I'll head over to you.
Actually very similar.
Yes, very similar. You actually talked about the customer and how it's changed from U.S. travel to Europe travel post-COVID. Yeah. Talked about that, about how you have to change your loyalty program, make these experiences for the customer now. So go into a little bit of that, but also how you're using technology to do those things.
Yeah, so, you know, as you mentioned, you know, our guests are, you know, going, they're flying less. You know, the pandemic and, you know, and just inflation has caused them to do one big trip and then do a lot of car trips. And so, you know, with 50 hotels scattered, you know, throughout the United States, you know, some beautiful and unique experiences that we provide, there is a different way about going and finding customers. And so one of the things was to make the loyalty program more attractive. We make sure that now we not only allow them to gain points by staying overnight, but all the other ancillary services, like, you know, food, beverage, massage, spa, we have ski resorts, golf, and then make them eventually redeem those points for those experiences as well. Also be able to now, using the website, to be able to book tea times and spa times. And as you can imagine, plans change. So they cancel those reservations. So how do we deploy that back to those that are interested but couldn't find an available spot? And so we're using technology and AI to allow us to market those things that became available with very short lead times to those that are most likely to consume them. And so it's like a puzzle of dealing with speed, accuracy, and providing an overall, you know, enhanced experience.
Yeah, and you mentioned AI being used as kind of this automated concierge in a way, but you still have the physical person.
Yeah.
In the
you know, in the upscale and luxury hotel group, it's highly unlikely that you'll be walking into the hotel and a robot will actually greet you and hand you a key to your room. So so there is still the need for personal service in luxury and you know, upscale hotels. I suspect that in the lower, more you know, extended stay and limited service hotels, that they will use more of those Gen AI abilities to bypass the check-in process and allow guests to get to the room. But we are still very focused in providing our guests a enhanced overall service. And so, but there is needs that many of you have stayed in hotels and press 0 or front desk and it rings and nobody answers. And so that is our ability to use Gen AI for concierge services at the hotel level to be able to answer those very simple questions. What's the best Italian restaurant? What's the closest steakhouse? What's the best attraction? Should I spend my night tonight? What's the concert? Those kind of things are all things that Gen AI would be able to really do very well.
Perfect. And Andy, I'd like to touch upon you. What kind of volatility do you see in telecom, and how are you using technology to meet those needs?
Telecom is a mature business, and we're doing everything we can to basically serve our customers and our shareholders more effectively. And a lot of that is thinking about how we use all this technology to deliver value back. And as the person that's responsible for data and AI at AT&T, that's my day job. That's what I live and breathe for, right? Is to use technology to deliver value to both the customers and our shareholders. And so we're doing this across the board. We're doing it in how we modernize our tech ecosystem to make that more efficient, more cost effective. And we're really, truly leaning into AI. AI is not new at AT&T. AT&T was kind of in the room when it happened, when the term artificial intelligence was created. It's truly foundational on how we run our company. But, we've mentioned generative AI already today. It's opening up new avenues, but building on complementary tools of traditional AI, great data work and great automation work, but really leaning into how we serve our customers in the care experience, how we serve our customers in the field experience, how we run back office operations, everything from HR to finance to legal. Supply chain is a great application for this stuff. And then, AT&T is a huge software development company, right? We're truly, at its core, a technology company. We spend so much of our capacity building software, and we're reimagining that an entire software development lifecycle with AI and generative AI at the center, right? Everything from the user story to creating the test plan, to creating the code, executing the test plan, implementing the code. It's all kind of automated through generative AI. And so those dollars are very significant and really are meaningful in our bottom line.
Thank you. And Sandeep, when we spoke earlier, you had mentioned these multiple kind of perfect storms between COVID, people going back to the office, whether it be interest rates, sustainability, all these different things. Describe how that has impacted CBRE and also the industries that you serve.
Yeah, so commercial real estate, as I had mentioned, is in a perfect storm, or was in a perfect storm, with these confluence, with return to office, where suddenly none of us were in our offices, then some of us would be in our offices, no one really knows, kind of a thing. That itself would be a tremendous impact on an asset class, but then there were high interest rates. So you combine those two, and it really becomes complicated. Then we manage over 7 billion square feet. And sustainability is a big demand. You bring all of that together, and what happens? What happens is that there is uncertainty. Uncertainty with respect to what is the right level to invest in a certain asset, which markets are going to move. And that's where technology comes in, because uncertainty creates fear. And therefore, as you've read in the news, commercial real estate has been in the news a little bit. Mm-hmm. And where technology can help is to create a bit more certainty around that this is how markets are moving. These assets are more valuable versus other assets. This is the time to invest versus dispose, and get predictive around certain things. The other requirement and uncertainty is to operate in an efficient manner and lower your cost of operations. And once again, technology has a role to play in terms of automating processes, in terms of just taking costs out in many different ways, applying AI, Gen AI, to get to those results. And we've been pretty actively doing that.
Excellent. And Lauren, when we spoke, you had mentioned too about cloud technology. Mm-hmm. So talk about the importance of that and how that has been changing as well.
Sure. Well, we started our cloud journey a couple of years ago, but it started around, funny enough, we decided to really push our operational apps into it. So flying our aircraft, which is highly, highly important, the cloud technologies help us to bring speed to market, help us to generate a lot, process a lot of information quickly, really help to also transform us internally from kind of some ways that we've always worked to a different way of working through these cloud technologies and really upskilling our technologists, but to be also taking our business along with us. So the business had to think differently about how they were processing information, or they were given tools at their disposal that they didn't have before, and so then that opened up their mind on how they would go forward and process things. So cloud technology has definitely been transformative for us in being able to think about also resiliency and security and other things that we take is very important to us as an airline, but then also help to push along the capabilities of our business, because really, we sell seats and we fly airplanes, and that's extremely important for us to do very, very well. And so as we've grown as an airline and more flights, the ability for cloud to be able to scale when we have a bad day in a hurricane, like last week, there's all these type of things that we have to be able to scale up and down, and cloud technologies help with that, as well as all the amazing capabilities around data and AI and other things that we're just being able to kind of take some momentum, and it keeps going and going and going with us.
Okay, now we've heard about some of the different advancements that you've done. I'm sure it wasn't easy, right? So I want to get into some of the challenges you faced when you started making some of these advances. So Andy, I'll start with you. What kind of challenges did you face? And for example, people in the audience who want to take that leap, what kind of advice could you give them for that?
Yeah, so I'll address that two ways.
Sure.
The first one, just as Lauren said, like the cloud journey, a really important journey for AT&T as well. It's not easy, and it takes a long time, and it takes a lot of persistence and perseverance. But when you get there, you get all the benefits that Lauren just mentioned. We have personally turned the corner on a lot of that, and we're seeing that now, and it's very fulfilling. So I think it's that. It's seeing that vision, having the plan, and the diligence to see it through. On the AI front, I'll talk about generative AI because that's really kind of such a focus of ours right now. We approach it from a few different ways. One, generative AI is a fairly easy entrant, kind of technology, but you have to think about it from an interoperability perspective. Being locked into any technology in this space today, I think, is risky because things are changing so fast. And so, as AT&T has built out, what we're doing, which we're looking at investments that are delivering, 2x in-year ROI on what we spend, a 20x 5-year return on investment. When we look at this, interoperability is key, and having a process that can operate across the enterprise, that keeps our data where we own it, that's not dispersed across systems, and our ability to plug and play the right technology for the right use case is super important for us.
Okay, and Sandeep, you had mentioned some of the successes that you have had with the technology, but what are some of the roadblocks or the challenges that you hit along the way, and how did you deal with it?
Yeah, well, whenever I think about technical challenges or implementation of technology, I think of my younger self, and as a young software engineer, I used to write code and be very proud about what I'm doing and scoff at all the managers saying, these people are not doing real work. I'm the one who's doing real work. But as I've matured and lost some hair, I've realized that actually the technical implementation is the easier part. The harder part, and I'll go back to the examples that I was sharing before. We as an industry needed to get better at insights. And for that, thank God we had been working on an enterprise data platform that had ingested data from hundreds of different data sources over the years, harmonized it, cleansed it. That was one of the challenges. And even today, I wouldn't say the job is done, because do we consistently capture data at scale, clean enough for us to be able to do something with it? The other area is efficiency with respect to operations. Now, I can automate any process that you give me. That's easy to do. But have we sufficiently driven change in the organization where we can have a sufficiently impactful margin impact? And so those change dimensions are really the harder ones, in my opinion.
And how did you handle that? What were some of the things you did to kind of...
I wish there was a silver bullet. I think it was more so just chipping away one step at a time. For example, as far as our data is concerned, we as a team started producing reports on data. So we have about 750 rules that cut across all our clients. This is the quality of our data. For every market and sub-market, we are able to provide a scorecard saying this is the quality of our data, and then start working with the business stakeholders to say, okay, well, you have to change your processes, you have to change your incentives. Most importantly, incentives. You can do whatever carrot and stick, but at the end of the day, the incentives have to be in place. Somebody's bonus has to be tied to data collection to be able to make that change.
All right, and Gustav, what challenges did you see over at Omni?
I think, with change, managing change is super important. The best way to handle that is to get the customer involved quickly and frequently, so that it doesn't feel like something is being done to them rather than something you're doing together. And so managing change is what Sandeep said. Implementing the technology generally is the easy part. The more difficult part is getting people to adopt it, embrace it, and managing that change and being the ambassador for keeping that alive. And the best recommendation I have is really to involve your customers early on in the process.
Do you see the same thing at Southwest?
The
Yes,
adoption,
I can see.
Right, like you said, building it somewhat is the easy part, quote unquote. And it's the adoption of the change.
Absolutely.
And it is really funny. I was listening to all of you guys going, yep, that's how this works, right? So we have done a lot. We've done it over time. I'm very proud of that data foundation change of pulling in that data, making people understand that we want to have the data be our data and not give it away to some vendor so I can buy it back from them, right? Like that's something I really don't want to do. So that being said, it's so funny because it's the change of the business customer or our operators or our commercial or our marketing groups and all of them having to go through the change because, like it or not, they have their incentive to sell or to turn an aircraft or do on-time performance. And so they're like, don't change my world, right? I know how to operate in this other world and I'm trying to do it. Well, we're trying to give them new tools and that causes them to have to change to do that adoption. Now, if you can get the right customer who can be your storyteller with you. So we were lucky enough, we have, there's a data science group that early on in the process, I said, if I can pull the stuff that you have hidden underneath your desk out and give you the better tool sets, will you come and play with me? And so he did. And so we've been able to really tell the story of saving money in this group or turning an aircraft faster or being #1 in completion factor and really be able to tell the output that matters to them. So back to your story about the incentives, like if you can tell the story of change in their language and what matters, because it's easier for me to support one application or it's easier for me to be in the new tool set because it makes my technologist really happy. But really what matters for them is, can I meet their objectives quicker and easier? And how do I get them to believe? Because they first and foremost see the change they have to go through and it will take too long or they don't, have the skills. And so there's a lot of resistance and you have to get past that. And so having a business customer go along or be your storyteller going, hey, you want to listen to her. She really knows, these teams really understand what they're doing and you're going to get the benefit from it. That adoption is like what you have to break through to really get the momentum going because building it isn't, funny enough, the hard part.
I love that they say that. That's not the hard part. The hard part is getting everyone on board.
Yeah.
Which leads me to, I want to get to one of our questions from the audience because this kind of plays in, okay, with the rise of AI and the continued cling to, I've read articles about this, dumb phones, fax machines, because you have this back and forth, old technology, new technology. How do you plan to innovate in a people place with such a diversity of tools at your team members' fingertips? So there's so much vast technology, new, old. How do you get people to kind of stay on top at your different industries? Andy, do you?
I mean, with AI, we're trying to meet the people where they are.
Yeah.
So we've created this platform called Ask AT&T, which is smart, really smart on AT&T information. People can go to that platform and have a great, generative AI experience. But really the bulk of what we do is to serve APIs back into the screens that people work in, right? We're serving now over 1 billion tokens a day, over 130 million API calls back into these systems. Because it's very inefficient to have the people come out of their systems into another environment. And so the systems already have their interfaces. The systems already have, their way of working. We're just making them smart, the generative AI, component.
Okay, and speaking of the different types of technology, we all know that it's an investment, whatever you decide to get involved with. A lot of people ask about the return on your investment, and where do you see that in each of your different companies? Gustav, you had mentioned that it depends on how accurate the data is. So get a little bit into that.
So, applying any intelligence to, a set of data, and I think we all mention it in different ways, the data quality is extremely important. Otherwise, the results are going to not be accurate. And so I think we have been focusing on doing what I call the right things and feel that by doing the right things, the return comes. It's very hard to measure in the initial stages of implementing AI what your true hard returns were. But if you can do something more accurate, faster, and improve your customer experience, I think that it's just a matter of getting the data artifacts from those changes and convert that into dollars. It's not as clear as I invested $1 million and I'm making $2 million. It's 100% return.
Right.
So.
And do you see that on the production, more than production side?
We've done it both ways, right? Okay. One way that we've done it is we've gone after and given a business customer a goal, right? Okay. So customer was, take this much cost out of their organization. And they signed up for that goal. And then we went after them and said, okay, what are the problems you have to go solve to be able to make that happen? And so it wasn't hey, I'm going to hand you some AI. It was, tell me what your problem. Oh, well, that needs an RPA bot, but this needs generative AI about producing material. And then over here, we just actually need to take the system and get rid of this screen. And, so it was one of those things where we went after it with a goal in mind and then found the solutions for that. The flip side is we've done the fishing expeditions or something like we have a really good tool. What could we do with it? And we've invested in that more from an innovation standpoint and kind of went after it. And to your point, a lot of times there's not even good data about what you're improving, but it feels better, right? And so we've been trying to do both sides of that because sometimes those happy accidents happen out of that innovation side, and then all of a sudden you find the big thing to go after. And then on the left-hand side, sometimes it's the easier solves and not what you think you need a big AI program to really make take the $100 million out of their group. So it's an interesting dynamic for us is on both sides, and it's again having the business customer understand what did they sign up for one side, which has a certain amount of pressure behind it, versus the other side, which is going to be much more innovative, and then it's just kind of what's your tolerance on that investment for that innovation. So that's how we've done both of those sides of things.
And I think that this whole benefits tracking is a super important exercise in any technology investment or digital transformation. And then the communications bit is also critically important. So what we do outside of our keep the lights on investments, for all our investments are tied to strategic priorities. There is a clear business accountable executive who has signed up to deliver a set of benefits. Mm-hmm. And we try not to miss the forest for the trees, which is just step back and say, okay, well, this is a 2-year journey. What do we expect to see in 2 years? We automated 400 processes, and we have unlocked multiple digit $1 million in revenues, in efficiency benefits. And the second thing is really packaging it in a simple way for your CFO to consume, for your business stakeholders to consume, maybe communicate that further in investor calls. I think those are the two things that we remain hyper-focused on.
And I'll add to that.
Sure.
One of the things that we've done to kind of supercharge the return on investment is that we've partnered with the business to create a transformation office within the business, and we've given that group funding, and then the business works with that team on use cases that are properly, vetted through the CFO organizations. And then we prioritize that in a one-to-end fashion across the company. So we understand from a technology perspective, we're working on the things that drive the most value to the company, focusing on those business cases that drive free cash flow impacting benefit. And that's, I think, how we've supercharged the start of a lot of the work we're doing around, generative AI.
Now, we have a few moments left. I just want to get into maybe some future trends, what you see out there and how you feel technology needs to advance. Some of the things that keep you up at night, or what gets you excited when you look ahead to the future. So Sandeep, I'll start with you.
Yeah, I'll say a couple of things. One is, obviously, generative AI has been on everyone's mind, and I know that the popular press has tried to come up with a fair amount of predictions around that, but it's a really promising technology, and it does keep me up at night, both in terms of, am I missing out on something? Is there something that the organization should be doing that we haven't been doing? And some of these conversations actually help to realize that actually, everybody's sort of finding their way. And the other is I spend a lot of time thinking about how are the businesses that I support going to evolve. For example, if I think about an investments, capital markets business, I truly think that we will move from macro information, macro assets, macro markets, to very specifically a client of one and a market of one, and data and insights is going to have a huge role to play in that.
Excellent. And Lauren, where do you see kind of a future trend headed?
Sure. Well, we talked about the cloud technology.
Correct.
And we talked about data.
Yeah.
And I think around all the AI and innovation that's coming that way, we underneath the travel industry have a concept around a reservation. And so we're actually really talking within the travel industry about restructuring the way that we think about reservations to be able to leverage these technologies differently than we do today. So there's a concept that's called offer order, and you go toward it versus a book and ticket type of process. I'm using that language, but it's really around being able to, again, back to meeting the customers where they need, restructuring the data, restructuring the underneath, and leveraging cloud technologies, APIs, and that advanced information and analytics and intelligence around our customers' needs to be able to really meet them where they're at and be able to give them the products that they need. Because again, it's about technology really at the end of the day is enabling the end business function. And I think what's interesting is you have to kind of marry up the changes in the tool set to, again, meet those business needs. And so I think that's really where, when I think about the things that keep me up at night, is like, am I making those connection points of being able to be on the latest technology and leverage them, but also to be able to meet the business needs and not just do something that is cool or what we're hearing in the news or anything like that. So.
Right. The latest shiny object.
The shiny object.
Gustav, do you see the similar, because also
I think
travel?
that, that what keeps me up at night is making sure that there is, a secure foundation that you can build upon. A lot of what I see with AI and legislation, we're still not out of the woods with how much flexibility and how much leeway everybody is going to have long term in terms of applying AI and Gen AI, to your business. And so having the right foundational, platform so you can build on and make sure that, it is secure and versatile, so that whatever, legislative demand come into place, that you can actually, pivot and make it work.
Excellent. And Andy, we have about a minute left. The pressure's on.
Okay.
So
what I'm
looking
most
forward.
Excited about,
Yes.
excited about three quick things. First is like kind of the new ability for AI to really reason without having to brute force it, right? So I think most people probably are playing with the strawberry version from OpenAI or O1, and we have use cases that's unlocking that we could not unlock before. Tied to that, we have now over 140 agents, that are breaking down complex use cases across AT&T that we couldn't solve before that, doing it in a way that are driving more value. And then the last thing, and this is a big break, kind of deal changer for us, is that we've always said, for the last 20 months, we've said human language is the new computer language. Well, the great thing here is that voice is catching up, so it's no longer the written or the typed computer language, but the ability to speak to this and to have that voice interface being the perfect interface to interact with these systems. That's changing a lot of things for us.
Excellent. Thank you guys so much. I know I see everybody out there taking some notes, so thank you for paying attention. Hang tight. Thank you very much. I just want to bring on to our next investor spotlight. I want to bring back Paul Schroeder, also from Invesco, and also Bloomberg's Michelle Lin. They're going to be joining us for a conversation. Thank you.
Global Head of Data Science and Insight for the Bloomberg Media Organization. And we are joined by Paul Schroeder. Thank you for being up here with us again.
When you
Paul
said we were cutting
is
through the
the
audience,
Invesco QQQ Equity Product Strategist for the Invesco QQQ Sponsor Spotlight. So thank you for being here.
Of course. Thanks for having me, Michelle.
Yeah, so as a quick reminder, can you tell us what QQQ is?
Sure. So I'm sure pretty much everyone's familiar with QQQ, but just to make sure we're all on the same page, QQQ is a passively managed exchange-traded fund that tracks the NASDAQ 100 index. Now, what is the NASDAQ 100 index? It is comprised of the 100 largest non-financial companies that are listed on the NASDAQ stock exchange. Now, a lot of people categorize it as a tech fund. You know, we like to say that it's more than a tech fund, that it's a fund filled with technologically focused and innovative companies that really have performed quite well, you know, since the fund's inception 25 years ago.
And we heard the panel before just talk about technological transformations and innovation and performance. Can you talk more about that?
Sure. So, you know, overall, when we're looking at really the confluence of innovation and performance, you know, if we look at it through the lens of QQQ, you know, and obviously what's going on most recently, a lot of investors have been focusing on the Magnificent Seven, with NVIDIA being the leader there. But if we take a look over the past 10 years, you know, the Magnificent Seven used to be FanMag. You know, before that, it used to be FANG. And really, what has drawn investors to this small group of stocks? Well, first, it's a group of companies that have become industry leaders and disrupted the sector that they were in. But I think more importantly, they've provided, you know, strong growth during uncertain times that have really fueled, you know, performance of portfolios. You know, we've also seen obviously a lot of those companies be heavyweights within QQQ. And the question that I get most commonly is, why is that? You know, why do a lot of these companies that we see grabbing a lot of the headlines, how do they end up in QQQ? You know, especially since it's a passive product. But I think the real question people should be asking themselves is, how are they always positioned, it feels like, for this next big shift that's happening within the way that we live our lives? And they show a high propensity to innovate. Now, you being involved in data, right, you know how important it is to quantify that. So we quantify innovation really through two metrics, the first being patent activity and the second being R&D spend. And what we've seen from companies within the NASDAQ 100, within QQQ, is that they're outspending your average S&P 500 company or your average Russell 1000 growth company on research and development.
Well, I mean, we heard Lauren and Sandeep talk a lot about uncertainty and volatility. How do you think about that through the lens of QQQ?
Yeah, I mean, there definitely is a lot of uncertainty out there. I think overall, we perhaps are going through a shift in the way people look at uncertainty and volatility and how they invest. You know, you have days like today in the market where there's geopolitical issues that come in where all equities are not shielded from that. But I mean, overall, we saw a shift with the way people invest during these higher volatile times, really starting, you know, in the second half of 2020. And people have really started to position themselves in their portfolios to be exposed higher to companies that perhaps have a greater chance to growth of revenue, earnings, and dividends going forward during these uncertain times. And, you know, that's exactly what we've seen from QQQ.
So is it fair to say that QQQ companies have a culture of innovation?
I mean, I would say so. I mean, you take a look at the top 10 holdings alone, about what those companies have done, where they've been with a lot of the major changes that we've seen in the world. Yeah, it does feel like it's a culture, but excuse me, if we take a step back, I think it's a culture that NASDAQ has really grown and created through the great work that they've done throughout the years. The NASDAQ Stock Exchange really has been the place, if you're the hot new tech company or hot new technologically focused company, we would like to say, you're going to list amongst the names of Apple, Microsoft, and NVIDIA on that exchange. And that's really what's been the power behind QQQ's performance through the years.
All right. Any last words?
No. Again, it's great to be here at these local events and to speak to you.
Yeah, thank you, Paul, and thank you for sharing your insights as part of the Invesco QQQ Sponsor Spotlight.
Thank you.
Hi, everyone. Thanks so much for being here. My name is Julie Fine. I'm the Texas Bureau Chief for Bloomberg, and I'm with Charlotte Jones, the Chief Brand Officer and the co-owner of the Dallas Cowboys. Charlotte, thanks so much for being here. And congratulations on the game Thursday night.
Like they were asking him.
In New York, so that's also a big positive. You know, I think a lot of people don't know your history with the Cowboys, but it's an interesting story. You're living in D.C., you get the call. Your dad owns the team now, not exactly on your bingo card, but now you're running the branding for a club that is famous all over the world. What is that like?
You know, that was an interesting phone call back then when my father came up to see. My brother was actually in Georgetown at the same time I was working on the Hill in D.C., and he said, hey, I've got this harebrained idea of buying the Dallas Cowboys. Well, at that time, the Cowboys were losing $75,000 a day, over $1 million a month. The team was 3-13, and 13% of the Dallas Cowboys was owned by the FDIC. Like, we really were America's team. Like, it was terrible at the time, and he couldn't get any financial supporters or his attorneys to back him. So he turned to his family and said, hey, what do you think? And quite frankly, it didn't look great. And when you looked at something like that, but you see the passion behind it, and you kind of just jump in with the support. And at that time, I remember he said the only thing he's ever underestimated at that time was that if we do this, it just might change our life a little. Well, 35 years later, it has changed our life a lot. And certainly the trajectory of the team, of sports, of the NFL has changed dramatically over the past 35 years.
You know, when you talk about changes, one of the biggest ones we saw was now AT&T Stadium. There simply was not a stadium like that until this one was built. But now you go around, you see SoFi, you see other stadiums that are doing very similar things. So with technology and innovation, what do you do now and how do you keep up after building something so state-of-the-art?
You know, I think innovation has always been really a part of our ethos. Obviously, our organization has been a lot about tradition, about competition, entertainment, obviously business. But it's really been innovation that has kind of kept us at the forefront, that we've never really been afraid to change, even when people didn't like the change. And as we built the stadium, we realized that we actually were building a venue for the future. So we clearly needed something that would host our game and would entertain our fans and do all the basic things that you would expect a stadium to do. But we knew it needed to be much bigger than that. And we needed to create an economic engine that would bring not only our games, because we only have 10 a year, but would fill that stadium for days and days of the year with significant things that would really generate and benefit the economy around Arlington and around Dallas. And in doing that, technology obviously was at the forefront. Things have changed dramatically again, over that past decade. But, when you find a partner that you lean on that can take you into those technology advancements, you really lean hard on them. And for us, connectivity, it was all about connectivity. We knew that people wanted to be able to communicate, and then they wanted to share their experience. So investing in a backbone and an infrastructure that could then allow us to continue to grow and innovate and expand was super important for us. We were the first stadium to have 5G. We just this past year stepped that up again, and we have C-band, and all of that connectivity has allowed us to really make sure that we have the highest speeds, all of the things that actually make your technology run. We needed that strength of backbone. I mean, you basically can run a small city like Plano off of all of our technology that sits in that stadium on any one day. And that has driven us to where our fan engagement is all about their ease, everything from phone, from live data, stats that change, in the second, to, everything being mobile, everything being ticketless, everything being cashless, all of those things on top of each other. But that's just the basic part. Everything else was really about entertainment, and how do we make sure that our fans had an experience that they couldn't actually just sit home and watch on TV.
Well, one way your fans that are in the stadium have that you don't have on TV is the barcode on the seat, which was it's just such an interesting thing that you don't see at every stadium. How did you come up with doing that?
Well, we tried QR codes long before COVID, and nobody knew what they were, and they really didn't care. And actually, I'll give COVID all the credit of the adoption of people actually saying, hey, I need to see how this works. I need to find my information through a QR code. And now they are on the backs of every seat. So anything that you need, whether it be, food, stats, directions to the closest bathroom with no line, it's all sitting there on a QR code that now our fans actually know how to use. And then we actually get the data from that to improve that experience. So the next time they click on it, it's even better.
You have AT&T Stadium now. You just talked about C-band, which I just learned, and I had to realize with my mnemonic device that it is rhyming with C-SPAN. But the stadium, it wasn't always AT&T Stadium. So how did technology and innovation play that role in the naming rights?
I think the most important thing you can know is what you don't know. And for us, that was technology. We knew what we needed out of a stadium, but we certainly didn't know the first thing about what it meant to be connected, and actually what it would take to build the backbone that we now have at AT&T Stadium. It's amazing now that so many projects underestimate, one, the cost, and then two, the ability to continue to build on top of that as you need to grow your capacity and your speeds and decrease the latency and everything that goes on top of that. But for us, AT&T was that partner. And once we knew that we were in good hands with them, then we became their kind of test spot. Anything that they wanted to try, anything they were looking at implementing. And we always knew that we had a reliable partner that would keep us ahead of the game. So if what you want to avoid on a Sunday is a complaint. And we get enough about what happens on the field, so if we could try to protect the other end of the complaints, then that's a winning Sunday. So trying to do that with AT&T allowed us to just let go of that and know that all of our fans have everything they need when they're sitting there in that seat. And you can imagine that over the years of how that's actually changed and the adoption of that, and as people want to share their experience, you talk about how much content actually leaves a game, and we have 100,000 people at a game, and then they're all taking pictures at the same time. They're all sharing pictures, uploading, and all of that. We push a ton of data, but it's actually not the highest usage of an event at AT&T Stadium. Is there anybody that could guess what be higher? Taylor Swift. 35 terabytes of data. And if you know anything about data, that is a lot of data, and it's going everywhere. You know what the second one is? WrestleMania. Close behind at a 30 terabyte
I would not
usage.
have guessed WrestleMania.
Yeah.
Taylor Swift.
It's pretty amazing.
The concerts, I mean, you have to prepare so differently, I guess, for the technological side of it.
Yeah, and I think that's it. And every event that comes in uses it differently. The basic things, as we all can expect, are very similar. But then how the interactives come, if there's a concert and they've got gadgets that are blinking and connecting and they have to have zero latency in there, that is really super important for us. So AT&T has always been a fabulous partner for us.
Artificial intelligence, it's a way of life. I mean, it really is a way of life now, and you have to use it, and you also have to prepare for what happens because of AI. How are you doing that at the Dallas Cowboys?
Well, okay, so big conversation here, and I think we all probably are now using it for efficiency purposes. But for us, there's a lot of considerations. The main thing is, are we using it for strategic purposes? There's a lot of distrust in how closed is the AI, because we certainly don't want to keep inputting plays and resources and everything only for it to learn and to teach, the Colts about what we're about to strategize against. So there's a little, leeriness into how far we lean there. One of the areas that you probably might not expect us to have jumped in so heavily in is really in the area of the digital athlete. And this is led out of the NFL office, and we have a partnership with AWS, and our players have wearables, whether it be in their mouthpiece or in their shoulder pad, and we take the video content from practices and from games and pair that data up with the real-time data of a player's exertion. And we actually have the ability to monitor exertion during a practice to figure out if we should pull a player, let him sit out a few reps, or pull him out of a series based on where we think that they're getting to a point where it could be more highly likely for an injury. On top of that, now it is not perfect, and it is learning on our dime, literally, but there's a long way to go there. But at the same time, it is a valuable resource that we hope to continue to develop, because player health and safety is obviously our first and foremost concern. But in that, I don't know how many of you are familiar with the new kickoff rule. We used over 10,000 different AI-generated plays in that scenario to analyze injury risk, return rate risk, because the goal of that play is actually to reduce injury, but also to create excitement so there's more kickoffs. So AI was a huge part of the development of that, and we will see if they got it right. I don't know yet.
That is a surprise to me, how you are using it in terms of in the mouth guard. When you're looking at all of this and seeing how it's being used, what was the biggest surprise to you when you said, oh my, we can do this now with that?
I think every day there's a new surprise of what we can do, and I think there still is. We're very conservative when it comes to that usage of, all right, just how much do we trust it now to help us inform our decisions for not only now but for the future. And I think as the advancements come and the more we get comfortable with that, both at the team level and the league level. How it aids us to continue is always going to be something that we are, staying right, in pace with that development and quite frankly, just our ability to trust it.
I want to turn a little bit to branding, which this stat obviously would make it much easier. Sportico has named the Dallas Cowboys the most valuable franchise in the world. So knowing that you have this huge international audience, how do you use technology to grow that even further?
Well, thank you for that mention, by the way. That's nice. But I will say this: what we have seen, and just in this past year, in terms of international, you have seen a lot of the NFL games expand to different international markets, like Brazil, for one. But something that maybe we didn't anticipate as much of, that's actually a fun fact. We've always really believe that we are a content company, and we generate content beyond the game, and where that content goes and how people consume it is truly going to be the direction in which we go as clubs and as we go as a league in general. But for us, we launched a new series with the Dallas Cowboys cheerleaders. And that became the #1 show of the summer for Netflix and across the international landscape as well. And I don't know that we actually saw that coming in terms of international exposure of people's interest, because it was actually something beyond football itself. And that ability to kind of connect in a different way was very important for people's interest, and to meet friends and fans in other places and in other countries that may not know our sport, but they can relate to us in some way. And that has been a really great surprise for us.
You've seen, Hard Knocks, and you've seen these sports shows do very well. And when you did the Dallas Cowboy cheerleader show, I'm sure you expected some level of success. But the amount of people that it hit, and in different generations, your reaction to that.
Well, again, I think surprised. I think it was a pleasant surprise, obviously, but I think the most important thing since we're sitting here talking about technology particularly, is Netflix has an amazing use of technology and data, and how their algorithms they use to reach people in different parts of the world have been an incredible benefit for us as a brand, for us as the content that we put out there. It will be really interesting to see as they air their first NFL games in Christmas. They've got 2 games of what that becomes, and what their involvement with the NFL becomes beyond these other content pieces that you've probably seen beyond the cheerleaders and quarterback and other things that they actually are doing. But, it all kind of goes back to technology, and how are we able to learn more about our fans, more about our customers, and more about the landscape of people and what they're interested in, so that we can tap into that and that emotion and that excitement and draw them into what we're doing.
You often hear about the stadium, but if you live in Texas, you know about the Star. The Star is not just your practice facility. It is a 91-acre facility. Oftentimes, we see stadiums giving to the area around it, but the Star, with its technology, with its way of reaching out to people, has really become a center point in that area. Can you talk about the idea to how it came to you to do this, and how you finally got it done?
The Star is a very interesting project for us, because it came out of finishing AT&T Stadium. And at that time, we had put $1.2 billion into AT&T Stadium. And quite frankly, my father said, you don't have any money, but if you want to go build a practice facility, have at it, but you got to find money someplace else, because we have this huge debt sitting over here on the stadium. But we thought, you know what, we're only here in the stadium 11 days. 11 days. What are we going to do for the rest of the days of the year? And how do we make sure that our brand is evergreen? As it turns out that only 7% of NFL fans ever enter a stadium. 7%. So all of those fans that are out there, however they're consuming us in whatever form and format, where can we offer them a place to identify and connect with who we were and who we are? And for us, we thought, why not try that at a practice facility? And why not combine that in a setting that can be a place where you live, a place where you work out, a place where you work, a place where you commune, and all of that have that opportunity to connect with people on different points that they have some kind of synergy and interest in who we are. And so the Star itself is our schools in Frisco, for all the high schools in Frisco. So it is their high school stadium. So it allowed us to touch with the most important thing about our brand is high school football. It is the heart and soul of our game. And if we can have a true connection with high school football, that only enriches the authenticity of who we are. And then how can you take that a step forward and make it a place where people can live there? We have a partnership with Roger Staubach in a multi-family unit called 12. Imagine that. And we have 36 different restaurants that are in this area. We have a partnership with the Omni, where we have a 300-key hotel. It's all branded in the Cowboys, so people can literally come. They can work there. We have Cowboys Hit. You can work out like a player or a cheerleader, and you can train with the best. And anything that you like in your own network can actually be integrated into our brand and get a chance to maybe have a chance encounter with Dak Prescott when he's walking into work. But the whole idea of the Star was taking that into an experience that fans could actually enjoy when they're not sitting at the game.
And I think you can't underrate the fact that you can see a player there. I mean, they are walking around. They're walking around because it is a practice facility. I think a lot of stadiums, they have most of their activities there. They have a field house close by. But this is an actual place where they are during the week, whereas players probably used to live in Irving. Now they're living out there and giving to the community there.
And I think, you know, the interesting thing about that is literally when our players walk off the field from practice, on walks the high school team to practice on the same field. So if you believe in inspiration or you believe in aspiration, what better way than to connect them together so they actually see each other? And I'll never forget the first day that we opened and we had our first high school football games. There were 8 schools at that time, high schools at that time, so we had to play all 4 games because everybody wanted to be first to play. So we had 4 games back to back, and all of our players literally walked out of the locker room and stood on the sidelines. They were like, the greatest memories that they have about football came from high school. So they loved it, the high school players loved it, the families loved it, and the whole design around incorporating high school football was all brought to life with, okay, well, you go watch your son play high school football. Well, what about your daughter who might be 12 and doesn't want to pay attention to the game? Where's she going to go? You know, they usually go play around somewhere else while their son is playing football, and what are they going to do at halftime? And all these different subsets of activities that happen around high school sport, and particularly high school football, was all taken into consideration as we developed everything that is in that space, so everybody in the family had something to do while they were there.
Charlotte Jones, we appreciate you being with us. You made my job really easy today. Thank you. Thank you.
Everyone. As we gather today in the heart of Texas, a state known for its entrepreneurial spirit and tech innovation, it's only befitting that we talk about how profound an impact technology is having on the world of investing, and even more so now that you have your own stock exchange coming up. Our panelists today have a diverse range of perspectives from the industry. We have Nicole Chambers from Texie. We have Alan from Wealthfront, and Scott from Goldman Sachs Private Wealth Management. Thank you so much for being on the panel today. So I was really looking forward to this event, and part of it was because just before the pandemic around 2019, I had a similar set of conversations sitting on panels in Asia, specifically in Singapore, which is aspiring and to some extent has become the center of wealth for Asia. And we were talking about how tech is kind of completely changing the landscape within investing, and we had the stock exchange of Thailand talk about, you know, how that is posing new and evolving challenges for stock exchanges as well. So this was my opportunity to basically connect the dots from Asia all the way to the US. I don't know about you guys, like why you are here, what was your hook for the panel or the session, but for me, I thought there were 2 or 3 things that really kind of drew me to fly all the way from San Francisco. One of that being the whole discussion that we had today at the other panels about the changing customer needs and preferences and behaviors. Is that really translating into something as serious as finance and investing? And secondly, how is technology really changing the contours of the industry overall? And of course, some PA advice, which we have our wonderful panelists on for anyways. So let me start with you, Nicole. The number of companies going public for the first time, is on this longest cold streak since the 1980s. What is Texi going to do to make going public great again? And what are some of the challenges that you're addressing there?
Sure. I think to put it into perspective, just to give you a quick stat, since the mid-90s, we've seen a decrease in public companies by 43%. And on the contrary, internationally, an increase in 35%. So there's certainly something that needs to be addressed. And, a really great opportunity for us to reassess the capital markets and bring the Texas Stock Exchange as a third alternative to the current duopoly that's out there. The Texas Stock Exchange is really taking a thoughtful approach to how to consider the business. We want to be part of the ecosystem, not an obstacle in the ecosystem. And, whether that be through incentivized trading or lower regulatory requirements, there's a whole benefit in being early on in this stage. Why I've been brought on the listing side is to talk to companies, canvas companies on the private and public side to understand why and how we can be aligned with their needs as they look at the capital markets or are already in the capital markets.
Okay, so we were talking about some of the changing behaviors and aspirations or even preferences. There are a lot of studies that suggest that some of that is a function of the generation in which you belong. And we promise this is going to be an engaging session, so I want to do an audience poll, and we don't have a tool there, so raise of hands. How many millennials in the room? And the definition is anyone born between 1980 and 1999. Okay, we do have some majority of millennials, so that's great. How about Gen Xers, who were 1965 to 1980? We have Gen Xers in too. That's amazing. And how about Gen Zs? Do we have some Gen Zs in the room? You'll have to be loud. Okay, you have to make up for your entire generation when we are polling now. So to share some data, millennials are increasingly representing a bigger proportion of the world's largest four economies, the US, China, Japan, and Germany. Specifically, closer to home in the US, 22% of the population is millennial, and together with Gen Zs, they're about 40% of the entire population. This generation is expected to shape the changing flows or the global investment flows over the next decade, and not just by virtue of entering and being more dominant in the workforce, but also because of the whole generational wealth transfer that we've heard and talked about. And one other aspect that people tend to miss is we always look at them as a consumer class, but what you're forgetting is even within the industry, people working within investments are going to be increasingly millennials and Gen Zs. So the way they look and approach investing is going to see a seismic shift if they are anything different from their parents. So Alan, I know Wealthfront is focused, and you claim to be like a pure play on millennial wealth. So why are millennials special for you? And how do you see their demands as being different from their other generational counterparts?
Well, thank you. So Wealthfront started in Palo Alto and mostly grew up with software engineers during the technology boom. Wealthfront was founded kind of 2010, so kind of in the second decade of 2000s. And millennials are important to us because they grew up very digitally native as they came into wealth accumulation, similar to Gen Z, which is essentially only live with the internet. And so they want that experience of digital first, which the first panel talked a lot when they were referring to their younger customers who want to be digital. And so we only have an app, right, or on the web. There's no branches. As a matter of fact, in terms of our clients who are around 30, 33, and actually have six-figure salaries and really high net worth, they pay us not to talk to us. So like Lauren said, they don't want to talk to people. And so this is a much different shift than, as you mentioned, other generations which want the higher touch. Now, that obviously depends at wealth levels, at higher wealth levels, which Scott probably deals with. People want to have their handheld and that higher touch. But when you're talking about millennials who are just now building that wealth accumulation, they want to interact digitally with their wealth app just like they would if they were ordering off Amazon, hailing an Uber, or ordering DoorDash or something like that.
So one thing definitely rings a bell with me. Like, I think my parents' generation is way less comfortable sharing information on the internet, like giving out their personal details, whereas our generation kind of grew up with the fact and very comfortable interacting and operating online, right? But I think Alan made a point here, Scott, that the behaviors of how we live our life are translating to the investment world. You've been doing private wealth for about 25 years now. Is that about right?
Right.
So you must be seeing that dichotomy of changing and evolving behaviors across the families that you deal with, right? Like, how is that manifesting in the way you are engaging your clients, how you're bringing the families together? What are you seeing from your vantage point?
So there are meaningful changes. I joined in the late 90s, as you said, so I've been at Goldman for 25 years. I did some different things in there, but I joined 25 years ago. And it was primarily a relationship then between the private wealth advisor and generally the matriarch or patriarch who had created the wealth themselves, and they were a first-generation wealth creator, typically. I'm generalizing, obviously. Since then, those original clients and the clients, the Ford family that the business was built around at Goldman Sachs in the late 1950s, additional generations have come into play, obviously, and so as Generation 2 and Generation 3 are brought up, for us, a big part of the interaction has been how do we help families educate their children on living with wealth and how do they get comfortable with it. The primary focus for that really has been around philanthropy, where a family may form a foundation, and as children come up at 16 or 18, some predetermined age, they'll join the board of the foundation. They'll begin to have a share of the foundation allocated to them, and they'll make suggestions, and the rest of the family will vote on it. And it's just been ways to try to get comfortable and help that next generation get comfortable. And for us, it's really important so that those folks will be comfortable working with the same advisors their parents worked for and don't immediately Google Wealthfront as soon as this ends.
It's a very valid point, right? How do you see that translate into the way the industry has changed, right? Like, obviously, as part of global markets, I know that there has been drastic change where that technology has brought about. But how are you seeing that? Is it more evolutionary? Is it more revolutionary?
And that is the way I describe it, right? So since I joined in our business, which again, the core business for private wealth for us is our advisors providing the best advice, whether it's trust and estate planning advice, whether it's tax advice, whether it's around philanthropy, whether it is around educating that next generation, and then investments mixed in there too. That's ultimately what we get paid for, providing Goldman's best advice in a high-touch fashion to ultra-high net worth families. That's what we do. And at its core, that really hasn't changed all that much in the 25 years that I've been there, and that's the phrase I used. I describe that change as evolutionary, not revolutionary, right? There are technologies that have made things more efficient. The account opening process, which used to be very cumbersome and all paper, is now digital. There's been meaningful technological improvement, but those are evolutionary changes. The core business has not changed. Our global markets business has been totally revolutionized, right? That business, the sales trading profession, which was a very, thousands of people on Wall Street paid exceedingly well, no longer exists. It's gone. That's all been automated. Access to that research that they used to call people with every morning, everyone has that access on the internet now. Those people are no longer needed. Those roles have been eliminated. Spreads that were 25 cents a share when I joined are fractions of a penny now. That business has been revolutionized. Our business evolves. And so from my perspective, 10 and 20 years from now, I'll be 73 at that point. We'll see. My sense is the business looks, by and large, a lot then like it looks today.
Yet. We'll see about that. Talking about long-term trends, let's talk about the other side of the market. So founders, how has that trajectory evolved? So when you look at the graph of number of public companies in the US between 1980 and 2020, you see a 50% decline after 1996. It's natural to think that companies are starting to not see the benefit of going public in the US. It also causes you to question the competitiveness of the US stock exchanges in a way. But also, if you look at the picture, it gets more dire when you compare it against the overseas exchanges, where obviously the trends everywhere else appear to be the opposite, like a growing number of publicly listed companies. So what is driving this trend, and why are the US founders not going public?
Well, I think they have more of an option today than they ever have. I will say there's a very healthy private market, which is really great because it creates healthy private companies to become healthy public companies. You know, I will say the U.S. is truly the most liquid and envied market in the world. You know, we have companies from across the globe looking at a primary listing in the U.S. because of the investment opportunity. It is a shame, of course, that there are U.S. local companies that are having a harder time wanting to go public. You know, where we see it is it shouldn't cost $10 million or $115 million to just be public, right? That's on top of your business costs, on top of your required customer and employee costs. Being public should not be a headache. It should not be an abnormal and exorbitant cost. We just saw a company last week, a New York Stock Exchange listed company, Orange Telecoms. They voluntarily delisted, maintaining their listing on Euronext because not only was it not necessary for them here in the U.S., but it was just too much of everything. And so I do think as a founder or as a company that has a strong private equity background, you can stay private for a lot longer to avoid some of these headaches, which again, why there is such a need to reevaluate the landscape of exchanges and make it a place for people to want to be a destination versus a required exit.
Understand. So we've heard some interesting views on both ends. And Nicole pointed out to the complexities within investing. The question I want the audience to kind of answer for themselves, you don't need to give us an answer, but should investing really be the same as ordering an Uber? Just think about it. And while you're thinking about that, I also want to do another show of hands poll. So how many of you actually use mobile banking apps and try to use that more often than going to the branch? Raise of hands. That's very refreshing. Thank you, guys. I want to take that one more step further on robo-advisory. So, Alan, the debate is ongoing, whether the future is digital or physical or phygital. You've clearly placed your bets on the fully robo model, right? Whereas some of your peers, Betterment, Vanguard, have chosen to kind of hedge the bets with more hybrid advisory options as well. So what drove that decision and why?
Well, like I said earlier, our clients in particular, again, the millennials and younger, they don't want to talk to a human. And so I think that there's actually not really an ongoing debate, to be honest. I think digital has won because everybody who's launched that really has no assets in that model and has either shuttered it. And so I think that the market has spoken there. As a matter of fact, why does a millennial who doesn't want to talk to anyone want to pay more to talk to someone? Because that's an upcharge to have the hybrid person. And so, especially for the investment advice that a robo-advisor gives, which is really a passive strategy of indexing, that's not complicated. You don't need to talk to someone to understand that, which is why I think we have better retention of our customers as well as very low support costs, because we're not trying to talk someone onto the ledge to give them an active stock pick, so we never have to talk them off the ledge.
So you see that as a winning strategy already. By the way, on the same note, let's do another show of hands poll. How many of you have actually tried a robo-advisor? Well, that's a data point. So I think that's another thing that I want the audience to take back. Just go and explore. Take a look at that. Scott, private wealth has always been a high-touch industry. And as much as Alan has declared self-proclaimed victory, I am not fully on board with that view yet. Like, there is definitely merit in being able to talk to someone in the world of AI, particularly where models hallucinate, and the way there is a lot of prone to error things with technology, right? So the factor, can you translate trust to technology the way you do with a human? So how have you seen the industry evolve on that regard? And what is the transition point where you think people will want to speak with an advisor?
Well, one, I would largely agree. I mean, I think it's irrefutable that digital has more or less won, fundamentally. Now, there may be digital delivery mechanisms through traditional financial services firms, right? But I founded a bank, and we manage billions of dollars from one branch location. And that's all we'll ever have, right? We've had to move to have more people in that one location, but it's still one location. And I was chairman of that bank until I had to resign to come back to Goldman Sachs. So I think the fewer locations, more app-based or other automated application, like that's going to happen. That is happening. It's going to continue to happen. That's Superman trying to stop the train. There's no stopping that at this point, and you shouldn't want to. What the traditional financial services firms will do is adapt and deliver and address their clients that way also, right? Goldman invests billions in that delivery mechanism. That'll continue. And then the business continues to evolve. It really was largely active management of equities when I joined it 25 years ago. Today, far more of our assets are invested in passive strategies than they are active strategies today. And another meaningful evolution is, speaking of banking services, Goldman has added banking services that didn't exist when I joined the firm. And initially it was bespoke. Well, you're going to buy an aircraft, we can do that. You're going to add to an art collection or a wine collection, we can do that. Now it's financing buildings like this one and material major products and projects that really can't happen online. That has to happen in person, physical. There's weeks and months of due diligence for that, right?
So that's a very interesting point that you raised there. A lot of incumbent leaders and wealth managers are bringing in more technology into their offerings. But Alan, is it the same? We talked about this.
We honestly don't think so. Wealthfront was founded, half the company is software engineers. We have 300 people managing $75 billion. And half of them are software engineers. And I think you have to have software DNA to be able to actually build software that does what it's supposed to do. There's a lot of Me Too products out there, but when you actually study them and see if they deliver on what they say they do, they're not as good. And that would be similar if Wealthfront tried to get into an adjacent industry like if we tried to go give human advice and open branches, we'd be terrible at it because we're mostly engineers. But so people who come from outside of software who try to build great software, I think, don't build it in a way that our clients want to experience it. And if you opened up a Vanguard app or a Charles Schwab app or something that's more legacy and you looked at it compared to what we've built, it's like looking at a Nokia phone versus opening up the iPhone 16.
Such a humble guy. Okay, I think on a more serious note, there are clear advantages of a tech-first strategy, and that's what we wanted to kind of get into the weeds of. One of the factors that allowed you to turn profitable was keeping costs in check. Half your firms are engineers, and we know you got to pay them to keep them. So how do you maintain that cost edge being a tech-first company? And talk to us about what is the mindset that you've kind of run with to take advantage of the fact that you're tech first.
Yeah, it's been said a lot here today. We automate as much as we possibly can, right? So I think one stat that usually blows people away is of our over 1 million clients, we only have 20 plus product support reps. So one product support rep is servicing 50,000 clients. Part of that is based on the fact that it's all digital and that the strategy is very basic with passive investing. But again, clients, they mostly can get stuff done self-service on the app. We don't call our client support service, we don't call them client support reps, we call them product specialists. They work with product teams to hear what the client is saying, and then they fix that in the app. So we're constantly iterating to make the experience better so that we don't have to scale our support staff linearly with customers. It's all done sublinearly, which helps us grow and have huge operating leverage where every additional dollar just follows to the bottom line. So to get another $75 billion, we don't need to hire another 300 people. It doesn't scale like that.
That's a very tricky question. I'll come back to you on that. But before that, Scott, how are you leveraging technology in Goldman Sachs? What are some of the clear benefits that you've adopted technology that has kind of brought on operational efficiencies for you?
You bet. So it's our biggest expense line item also, as you would imagine. It kind of goes through this big budgeting process every single year, which is, by the way, we're entering into right now. And what it's done is it's improved the client experience by streamlining a lot of things. And then it's really freed up our advisors and their support teams to spend more time with their clients, which again is our core business, right? That's the high touch model. The average account size, just to put it in perspective, at Goldman Sachs is $67 million. And so it is a high touch model. The more time we can free up for advisors to spend time with their clients and provide better advice, the more we improve the client's experience and the business for Goldman. And so that's where it's been for us. It's been automate as much as possible. By the way, that's helpful from a compliance standpoint because you have consistency as well and exception reporting, and those are the investments we're making.
So, and you brought in a lot of the intelligence that your advisors or your relationship managers actually had onto the tab, which is also very good for business because you can manage attrition, which is one of the key challenges, I guess, with private wealth managers, right?
That is correct, and that's also a significant investment, as you'd imagine.
So, to your point, Alan, about this is a very controversial thing to say. You have one customer rep taking on 50,000?
50. They're not taking them on. I mean, that's just that's the way the numbers work. Like, we don't assign them. It's just there's 1 million clients and there's about 20 support reps.
Yeah. So that is still that ratio, right? Like, that's how you kind of look at customer support. And you don't use NLP for your chatbots.
No.
So speak to us, and I think that's really profound because I've realized there is this inherent need. Everything needs to be ML. Everything needs to be AI. And here we have a 99% SLA with customer support without the use of NLP. Please talk to us about that.
And I think the first panel talked about it a lot, right? You got to listen to your customers. And so if we listen to what our customers say and fix it in the product, then we stop getting those contacts, whether they're through mail, email, or phone calls. So it's really as simple as just getting your customers involved and really listening to them. You don't need to adopt AI just to get that done. We've been able to become extremely efficient without doing these natural language processing models you're talking about, just by merely figuring out what are the most tickets we're getting, assigning an engineering team to fix that, and then moving on to the next thing.
So plain old automation.
Yeah.
Nicole, how are you guys leveraging technology?
Well, technology, of course, is the core to our exchange being completely electronic. I think, Scott said it so well in just our generation, at least most generations in this room. The trading landscape has changed tremendously. And I'm thrilled that at the Texas Stock Exchange, both Jim Lee and Cam Smith, so Jim, our CEO, and Cam Smith, our co-president, were really the pioneers, to move from, human-based trading and required of all of the kind of manual pieces to it to electronic trading. So, we have the band back together. And on top of that, we have a fantastic ensemble of amazing veterans in the market technology space. So we will be incredibly competitive. And I think as we continue to build this, the next question is how can we make it even more incentivized and offer something that's unique to create on-market trading and bring back that type of volume to the market.
Wow, that's something to look forward to, guys. I think we're very close to time, but the key part of our panel is still pending, which is what does the future investor want? And I know a lot of clients put in requests to talk about, Scott, I'm going to pick you on that, and that's right up your alley. What are some of the asset classes that you expect to do well in the next 3, 6, 12 months? And I was asked the question 10 years down the line.
So I'll say on the shorter time horizons, really for the last couple of years, kind of everyone's best idea has been private credit. Your natural reaction should be when everyone has the same best idea to be worried, by the way. But nonetheless, for that kind of time horizon, you can probably live with that, 3, 6, 9, 12 months of those. And then for 10 years we're staring at flashing zeros here. For 10 years or longer, that's equities. You don't have to make it more complicated than that. It's probably largely passive, as you described. I think I'd do it on a tax-advantaged basis if you're a U.S. taxpayer. And then it's probably U.S. equities.
Awesome. Please feel free to mingle with our panelists and discuss more of these ideas along the way. And we're clearly out of time. So thank you so much. It was really nice to hear from you and amazing conversations both on stage, off stage. Thanks for being such a lovely audience.
Well, that does it for the content portion. I want to thank all of our speakers, all of our moderators for their work today. I also want to thank all of you, too, for engaging and sending in your questions and being a help that way and taking your notes and all of that. Of course, I definitely want to thank Invesco QQQ for your sponsorship. If you would like to find out more information, just head to the event website, click on the resource tab, and you can find some information there. And if there's something that you heard that you were trying to remember who said what and what it was, you can go back and you can watch the entire production. Head to BloombergLive.com and you can watch it there. We are not done yet. October 29th. Mark it in your calendars. Yes, that's where we're going to Boston for our next event. So if you can't make it to Boston, join in on the live feed. But head to BloombergLive.com and you can register there. We hope to see you. On to networking and to some cocktails for everyone. And for those watching on the live stream, have a good night. Thank you very much.
Folks, please join us for cocktails in Gallery 2, right across the hall. We're going to exit right that way to Gallery